Corporate Radar, brought to you by Suzlon, powering a greener tomorrow. And Fast Track to Prosperity from Creative Infotainment Content.
Welcome back. You're still watching Corporate Radar. Lots of money getting into the market. As Alok was talking about, the liquidity picture is still extremely benign, and that's perhaps why the market's refusing to cool down. We've seen a spate of new mutual fund launches out here in our market, led by global players like Fidelity a while back, and we've got plenty of new PMS launches for high net worth clients as well. The New Horizons Fund is a PMS fund which Refco SIFI is launching in India. Vineet Bhatnagar of Refco SIFI is here, and Michael Martin of Martin Capital, and he's the gentleman who will manage the money at this PMS. Both of them have joined us in our studios. Vineet, Michael, thanks very much for joining in. Good morning to both of you. Lay out, Vineet, what's the plan? It's a classic PMS. What are the cutoffs, and is it just pure domestic money?
It's a pure domestic money. We are talking about raising the funds from the local private individuals, high net worth, to be invested in the local equities market. So in that respect, it is the traditional way of approaching it, but it has certain elements which are completely new and unique, we believe. One, we are looking at it to be handled by, for the first time, a money manager who comes from a market which is mature, developed, experienced and sufficiently regulated. Secondly, we are not following the orthodox method of either looking at the fundamental approach or momentum based investing as we understand, which heavily relies on technical charts and day trading. We are looking at a methodology which is loss limiting, which is completely and purely mathematical, and it is something that would work in a way the way many quantitative models around the world have become very popular for money management.
Michael, all our PMS managers in India have sufficient experience of this market. I mean, they've been managing money in India for a long time. Right. You come in without experience in India, but you've got a model which could work in any market, which is neutral to a market. Could you explain how you intend to be successful in a market which you don't know sufficiently about?
Yeah, first of all, we don't use any fundamentals. We measure the price and the volatility in a proprietary algorithmic manner to determine the appropriate size for an investment. Knowing about the U.S. commodity markets, we understand a little bit of volatility. Yeah. So with that, we feel when we overlay our algorithm on top of these markets, although they are volatile and although you're at historical highs, the returns can actually be quite handsome. However, we're not just seeking outsized gains. We're following our system with no emotions, no fundamental analysis, such that the returns can be moderate to aggressive with respect to a very low or conservative drawdown.
Can you give us an example when you speak about algorithms and stuff, without looking at the fundamentals of a stock like, say, Reliance or Hindustan Lever or whatever, how would you go about choosing it?
First I would just follow my system. I designed it on C++. It doesn't take into account human emotion, which typically is fear avoiding, for example. What we're looking to do is conjugate at the same time for any script the volume, the overall predominant volatility of that script, and its overall price. And we measure them in a proprietary manner to determine the appropriate size given where the market is and given how much assets under management the client has with us.
So does it at all become possible, Michael, to get a skew of a sector that looks like that, or is it very, very stock specific?
You know, it could end up that way, although that's not its intention. If it turns out that some of the big automakers, for example, take off, for example, like Hero Honda or Bajaj or Mahindra and Mahindra, it's likely that if a sector is moving, we very well could have the best names in that sector, but we wouldn't intentionally go out and buy them. And then when the trend is over, we're out. We don't fall in love with them. It's not like Rani Mukherjee or something like this where I want to hang on to them for dear life, although, you know, with Rani it might be different. But
you track more than the equity market.
I see too, yeah.
One word though on where we're trading at this point. Are you comfortable with the levels you're getting into this market at?
In fact, I think the mathematical models are very counterintuitive. It is precisely at these times when there is greater caution, there is good amount of lack of clarity, that a model which is purely mathematical, which has got an algorithm which is looking back at the prices, the volumes and various other heuristic variables, is the reason why it could work well. So whilst on one hand we are groping as to where the Sensex would go after 7,300, I think a mathematical model will precisely indicate whether there is strength in the trend left or not. I think it works best at these times which are on one hand euphoric, cautious, and at the same time still unclear.
But can it precisely indicate the kind of returns you can expect?
The objective with which the model works always looks for the ratio of the potential outsized gain to the possible equity drawdowns. So whilst it is not possible to say whether the model will fetch you a 60% annualized return or a 55% annualized return, but having seen the performance of Martin Capital Management and even the mock trading that we did with him for 60 days between May 12 and July 8 does indicate that the trend could be still intact.
Martin, a fair amount of the selling that you will do would have to be on the strength of your previous performance.
Yes.
What has that been like relative to any benchmark that you've used?
Yeah. Well, I don't know if it's an indicative of the future, but we handily outperformed most managers last year in the U.S. For the period ended 2004, our net return net of fees was 76%, with no more than an 8.69 drawdown over any pullback or equity retracement. So we did okay. We're very used to historic highs. There were several markets in the U.S. The COMEX copper, obviously the whole energy complex with natural gas, crude oil, obviously, and then the distillates. They had very, very big moves. So we're used to buying things where it might be counter-emotional for the investor to step in and do it. The benefit of our model is such that it allows us to be bold when someone might otherwise be cautious, and it allows us to be conservative when they might otherwise be aggressive and try to buy a pullback, which statistically could indicate that we are in a corrective mode and we shouldn't be buying. You should actually be somewhat bearish. Because we feel that human beings are pleasure seekers basically, and that they want to go to a flight to quality because they want to go safe, and being safe isn't necessarily a good financial decision.
Sure. When you apply your model to two markets, crude and whether the BSE Sensex or the Nifty today, what do you find?
We look at them, we are indifferent actually. We can look at Nifty, Sensex, crude, GUR, chili peppers, pulses, copper, Google, and our risk management is such that we wouldn't treat them any different.
No, my question was when you apply the model to crude right now as it stands, what do you find? How can you predict where crude is going? What would you predict?
We wouldn't predict. We're trend followers, so we have no ego or emotion tied into where the thing could go. One that I'm aware of is, for example, Bajaj Auto. Right now where it's at, we have no idea that it can't eclipse 2,000. What we have found in working our model in real time with real money is that when we can catch the most amount of people off guard is when we make fast, easy money.
You would buy Bajaj Auto now?
I can't. My employer is sitting right here. He's given me clear instructions that I unfortunately cannot make any recommendations. So on any other time, maybe during a time that we can talk about where the model might be, but I can't.
What do you think of Rani Mukherjee though?
She's the single one, right? Kajal's married, Rani's single, so I'm open. I know that I have a good sense of humor and I'm much taller than she is.
Okay. Which always works.
From one young Miss Mukherjee as well.
I know, all the Mukherjees here.
Okay, lots of...
I love Bengali people,
Okay.
We hear ya.
Good luck to both of you. Thanks very much
for having us.
1st August, hitting your stands soon. Not fundamentals, not technicals, not emotions. This is a fund with a little bit of a difference, so if you have the appetite for it, Refco SIFI is what you need to call. We're going to take a break. When we come back, we're going to talk about 5 stocks which may be overvalued. Now, we've gone through a huge phase over the last 1 year where we've got you lots of undervalued mid-cap stocks, but we've probably got to the stage where some stocks are stretched on valuations. So we thought we'd get some analysts in to talk about where you're better off moving some money to cash, where stocks have clearly started trading above their reasonable value.